you reckon that this 2022 has ushered in the period of value investing which will last for a long time now? Because in our interview last week, you did mention that you believe that central bankers will not now be printing money at a scale that they have in the recent past. So therefore, does that usher in an era of value over growth for the medium term?
Yes, I'm a believer like that, because if you look at the last 18 years, which are the periods where value investing didn't work? It didn't work in 2007. It didn't work in 2016, 17. Didn't work in 2020. So if you have a period of time where there is extreme bullishness or something like that, or where central banks actually print large sums of money, in either of these kind of cases, it hasn't worked. I don't think we are in that kind of a situation. Right now, the central banks are very clear that they have to actually defeat inflation.
Hmm.
So at this point of time, they have to behave rationally, actually tighten liquidity, remove liquidity from the market, increase interest rates. So in these kind of periods, clearly value investing has a good chance of working. Can equity itself deliver very big returns? That we can have a debate on. But will value has a good chance of delivering good returns within the equity space? I believe so.
Okay, Naren, a quick introspection, if you will. The last 18 years of your fund, you've had tremendous results. Have these largely been even and steady in nature? And if so, I would want to understand that how have you managed to do that even in periods wherein growth beat value investing hollow?
They haven't been steady. That is the reality. In fact, it's best to talk about the distant past, like 2007, 8, 9.
Mhm.
When I was running the fund in 2007, in 2007 December, people used to ask me, what is this value? It's underperformed so much.
Mm.
It was a year where the fund underperformed by, I think, 13 to 15%. And people used to get completely distraught by the underperformance of value. But if you measured the fund in 2009, the outperformance was there even on a 3-year basis. Because in 2009, the outperformance was so significant that even the 2007 underperformance was taken. So I think there is nothing called being very steady. And that's one of the reasons we either tell people to invest for the long term or do systematic investing.
Mm.
So there can't be a period where you can always say we will do well or something like that. That's not something any value investor believes and says, that you can have steady returns. But what happens is, because you're doing something logical and rational, you're very confident it will work in the long run. And that's why we are very confident that the 18-year experience in value discovery was good. But there have been periods in between where the 3-year experience wasn't good. But the 18-year experience is good. The 10-year experience was good. I think over a 5-year period, the experience was good. But there have been periods, even 3 years, where the experience was not that good.